Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will create an invoice populated by a billable expense. In other words, we entered an expense for inventory in the past and we'll link that to the invoice we create at this time within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are at the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We will be entering an invoice and populating that invoice from a check that was written in the past and a purchase order that was created in the past, which we wrote the check for. So let's go through the scenario of what is going on real quick, and then we will enter the invoice. We're going to select this item, this drop down up at the top, in order to go through this process. What we're imagining to have happened here is that we had a customer come into the store, wanted a particular guitar, that guitar a different color or some type of customization for it. Therefore, we went to our vendor asking for a particular guitar, not just for our store, but for that particular vendor, and we had a purchase order in order to do that. Remember that purchase order does not have a journal entry related to it. It's just a request. We haven't paid for it yet, and we haven't received the guitar. But on that purchase order, we did include that it was for a particular customer. Then when we got the guitar, we made a payment for it, and when we made the payment for the guitar, we still populated that payment through the purchase order and applied the fact that it was for this particular customer. Now we're going to go through and go to the customer here and create the invoice, which will be linked to the check we wrote following the process of that guitar being given to us, and it will be populated through the original purchase order, which was then followed up by the check. The same process could be followed with the bill. In order to do that, we got to make sure that the check has the billable option available to it. So we could go to the invoice here. We can also go to the invoice over here on the sales area. That's what I'm going to do. So I'm going to select these sales on the side, and then we're going to go to new. So we want a new invoice. So we will select a new invoice. And the invoice is going to be related to a customer named Eric Music. So we're going to select the drop down, and we could type in Eric Music and it will auto populate. Selecting Eric Music and tab, we get this pop-up over here saying, hey, there's a billable expense there for $400. If we open that, then do you want to leave this? I'm going to go ahead and leave this for now. We see the information for the billable expense. So mark as a billable expense. Here's the actual check. Here's the Eric Music, the description, and the amount. If I click on the check here up top, that'll finally take us to the actual check. So here's the check we entered, and it was for $400. If we scroll back down, we see it was for the Epiphone. We said it was billable, and it was for Eric Music. If this isn't set up, you can go and find the check in the check register or back through the detail in your cache and set up this billable item, and then it should link as we want it to. Note that this will be an imperfect method because when it pulls over, it's not going to pull over the sales price. It'll pull over this cost, which is the cost, and we'll have to make an adjustment. But it will show us a link, and it'll tie this thing out so we can see that this item will pull over automatically. So we'll see that as we go. I'm going to close this back out. We're going to go back to the sales item on the left side, and then we're going to go to new invoice once again, and we'll type in Eric Music once again. Eric Music, there we go. So we're going to say then that's going to be that billable item. We're going to say, yeah, add that, please. Please add that. And when we do so, the balance changes, and we can scroll down, and there is the invoice that we have. So note that this method is not perfect, however, because it's pulling over the cost, the $400, rather than the sales price, which we don't even know because we can't see it on this form. So this method doesn't link it so that we can see this information and link through the whole process, meaning the purchase order to the payment that we made to the invoice, and have it all linked up. However, it's pulling over the cost, and we need to change that to the market price that we're selling it for, not what we bought it for, in other words. So as this changes, if there's any updates, we'll take a look at that, and we'll fix the link and see if we can link this out a different way The on-ground version, of course, kind of links this out a little bit differently. So in order to fix this, the workaround for this, the easy kind of way to fix this is say, okay, it's linked up, we owe this amount, and that links up the bill. We just want to change the rate. And how do I know what the rate will be? Well, I'm just going to make another line item, and then I'm going to delete it. So I'm going to say, here's an ELP, another ELP, same item that we have up top. The sales price is $500. And so I'm just going to change this rate then to $500. And that's the rate we want to have. And then if we tab through, we have that. And then I'm just going to go ahead and delete this item. We don't really want it. We just wanted to see the rate. So that's one way we kind of link everything in and have this, rather than typing in this information, you can have it pull in automatically through that process. The rest of this process is going to be much the same, so as other invoices, but invoices are complex transactions, so let's go through this. We've got the invoice up here. What that means is, of course, we're going to increase the accounts receivable. So accounts receivable is going to go up. The other side typically will be some kind of revenue account or income account. We're going to call it sales because we're selling guitars in this case. And then there's going to be the inventory that's going down. The inventory is going to be going down not by the amount here that we had, the 500, but by the prior amount, the 400, what we bought it for. And there's a related cost of goods sold. So we'll see those items when we take a look at the financials. We're going to tab through this. We're not going to put anything in the email. Then we have the billing address. The billing address is important because we have to have it so that QuickBooks can calculate the sales tax. Sales tax is going to be different by region. It's different by what we sell. And in this case, we have to have sales tax for where we are because we sell a guitar. We're not going to charge sales tax for service items. The sales tax concept itself is pretty basic. Once we know what is taxable, we just apply the rate. And I'm going to try to apply a 5% rate, even though QuickBooks is going to try to apply the rate for any location, just to have a kind of a problem that will work anywhere. So in order to do that, you do need to have it calculate something. So you got to put the place that the taxable entity in. You can check a prior presentation for that. We're going to put an address, the billable address, and we need an address for our company so that QuickBooks can calculate something. If we don't do that, QuickBooks won't calculate anything, and you can't even just put something in there for an example problem. So you got to set those up, and then we can then change it if we want to. So we need the billable address to have that information populate. The date's going to be 01/25/21. We will be working in the future. The due date then a month later. And we're not going to have a shipping address. And then, of course, this populated by itself. But we had to change that. So if you are linking it, you have to change it. If I was to enter this in just from scratch, it would then put the sales price, not the purchase price. And that would be what we want on the invoice. Because the invoice should be saying two things here. It's gonna tell us the sales price, which is going to increase, in this case, receivables and sales. And the other, which we can't see, but it's still recording, is the cost, which is going to record the reduction in inventory and the related cost of goods sold. Then we have the sales tax. Now the sales tax is calculated based on the information we put in for the sales tax. Again, I just want a flat rate. So what we're going to do is adjust it, which we can do now that it's been calculated. I'm going to say 500 times 0.05, 5%. And we're just going to take a flat 25. So we're going to change that sales tax. We're just going to change it to 25 to have kind of a more simplified problem. QuickBooks is going to say, hey, that's not what we calculated. Did we do something wrong? And we're going to say, no, you did everything right, but this is a practice problem, and we want to keep it standardized. So once again, the concept of sales tax will be the same. We just want to keep a standard rate. Once you know the rate for wherever you're at, then you can apply that rate, and you can use the auto apply that QuickBooks now has, which could be very useful, especially at different locations. Could be very nice. It is very nice, actually. So, all right. So then we're going to go through this, and let's just analyze what we have here. What's the transaction going to look like? Well, it is an invoice, so accounts receivable is going to go up. It's going to go up by the sales price, which is sales price plus the tax, which is $525. The other side of that is going to be sales. It's going to go up not by the $525, but by $500. The difference is $25. That's the sales tax. We don't get to keep it. We owe it back, and therefore it's going to go into a liability, which will be sales tax payable. We also have a decrease in inventory. Inventory is going down, and it's an asset, so it's going to decrease. It's going down by this guitar, but not by 500 the sales price, but by 400, an amount known by QuickBooks, not seen by us anymore because we changed this to the rate, and therefore it's going to decrease it by that. We'll see that in the forms, and then the other side is going to be cost of goods sold. So we're going to increase in terms of the income statement, net income, by 500 and decrease by the cost, which we saw was 400. Net increase is 100. Let's see if that is the case. We're going to save this, take a look at the forms. So we'll save that. I'm going to say, yep, I want to save that, close this out. We're then going to go back to the reports, left side. We're going to go to reports, and we're going to take a look at the balance sheet first. Balance sheet. We'll change the dates up top. We're going to go from 01/01/2/1 to 01/31/21, January 1st, 2021 to January 31st, 2021. Run that report. Then typically I look at the receivable first. We made an invoice, so what happened to the receivable? Let's take a look. Go into the receivable here. There's Eric Music. There's our information. Increase in the receivable by the 525. If we click on the 525 and scroll down, we see the 525 here. So that's the total that it's going up by. The other side's going to be sales. So let's go take a look at sales, which is on the income statement, or profit and loss as is called by QuickBooks. We're going to go to the reports over here. We'll type in profit and loss. And we'll change the dates once again from 01/01/2/1 to 01/31/21, and that is January 1st, 2021 to January 31st, 2021. Run that report. Then we had a sale, we had a service sale, so it should be up top right there. So we're going to select that item. And we have the sales item for 500, not 525. If we select that, we see the same invoice, but we only have the 500, not the 525. The 525, the difference is going to be into a payable, a liability account. Let's check that out. We're going to close this back out. We're going to go back to reports and back to the balance sheet. So we'll go to the balance sheet. We're getting good at entering the dates here. Balance sheet. We're going to change the dates once again from 01/01/21 to 01/31/21 and January 1st, 2021 to January 31st, 2021. Run it. Then we're going to go to the liabilities. Assets and then liabilities are going to be down here. We see the liability to the California State Board of Equalization. That's because that's who we pay the sales tax to. Instead of just saying sales tax payable, we actually are naming the board here. It's going to change, of course, by our location. If we select that item, then we see this information. It's breaking it out. So these three should add up to the total of 25. If we click on it, then we see the same 25 there. There is that. We're going to close that out. Now there's going to be the other side, the inventory going down, and its related cost of goods sold on the profit and loss. Let's check that out. Going back to the report summary, back to the balance sheet. The other side is inventory going down. If we go up to inventory, we see inventory up top. There is inventory. If we select the inventory, then we scroll down, we see that it is going down by the 400. So here is the 400 decrease in inventory. If we select that item, then we see our invoice once again. We're going to close that back out. And we're going to select the last piece, which will be the cost of goods sold. For that, we're going to go back to the reports on the left-hand side. We're going to scroll back down. We're going to go to the profit and loss report. We will change the dates. Dates going from 01/01/21 to 01/31/21. January 1st, 2021 to January 31st, 2021. Run that report. We then have the cost of goods sold. That is an expense item increasing, which would decrease the total net income. Selecting that cost of goods sold, we see that we have the 100 here, the 400. And once again, if we select the 400, we don't see the 400 on this form. We only see the 500. The 400 is being driven by this item here. So even that we changed that, remember, to 400 to 500, because it was recording the cost or the expense, and we needed to put the sales price. So note that it's still putting the 400 like it should in the cost of goods sold. And in the inventory we just saw. If we close this back out, and go back to the report. So that's going to be our information. It went up by 500, and the sales went up by 400. Cost of goods sold, net increase, net income 100. Then, and if we want to see that 400, then we can go to the sales on the left-hand side. We want to go to products and services up top. We're looking for the Epiphone, and there's the cost that we sold it for, 500. I mean, there's the sales price, 500. Here's what we bought it for, the 400. Hello, in this presentation we're going to record an invoice for a pre-ordered item within QuickBooks Pro 2018. The scenario being that there has been a purchase order that has been put in place specifically for a guitar that was intended for a specific customer. That guitar has now been in place. We have the guitar, and now we are creating the invoice related to that pre-ordered item, that pre-ordered item of inventory. In this case, in our case, that inventory being a pre-ordered guitar. If you've been working along with us, we will be continuing with the Get Great Guitars problem. If not, that is okay. We will still work the scenario, that scenario being that we're going to create an invoice as we have in the past, but this invoice being a bit different, because we will issue it to a customer who has pre-ordered. So we've already have an order that was put in place. We actually purchased this piece of inventory specifically for a specific customer. Hello, in this presentation we will be issuing an invoice for a pre-ordered inventory item within QuickBooks Pro 2018. The scenario being that we had a customer, the customer wanting a guitar. We sell guitars. We did not have the specific guitar in the shop and therefore placed an order with our vendor specifically for this guitar for this customer. That guitar, once received, now needs an invoice to be processed for that, and we're going to link up the invoice with the purchase order, with the pre-ordered item of inventory as we create the invoice. If you've been working along with us, we will be continuing with the Get Great Guitars problem. If not, that's okay. We're still going to go through the same scenario so you can see how this scenario will be set up. If you have a backup file related to this part of the problem, you can restore that by going to File and Open Restore and restore that. We will be entering data, so therefore, if there's an error that happened in the past or we haven't been following along in the past, then the backup files could really get you right to where we need to be to follow along with us at this point in time. Going forward at the end of this problem, hopefully we end up at the same place in terms of the data we are entering within the system. Also note that we have the open windows open over here. That done by going to View, Open Windows. We are currently in the Home tab, only Open Window Open. If that is not open on your system, go to Company and Home tab. Now, we're going to be working with creating an invoice. We've done this in the past. However, we have a bit of a twist this time in that we're going to create an invoice for a customer who had pre-ordered, meaning the customer pre-ordered. When that happened, we didn't have the inventory at the store, and therefore we're going to order it from a vendor specifically for the customer. We did that with a purchase order. So remember, the purchase order is going to our vendor, ordering a guitar for us. However, within the purchase order, we're going to list for our records that this particular purchase order is related to a piece of inventory we need for a specific customer. And therefore, when we ring up the customer on the invoice, at the point in time that we're ready to give the guitar over to the customer, it will pull that information over directly. So let's see that. If we go into the purchase order here, I'm going to go back to prior purchase orders, and I'm looking for Eric Music in the customer. So this one went to a specific customer, but not what we're looking for. Here's Eric Music right here. That's in the customer field, not a required field for the purchase order. We may have been purchasing just in order to stock the store, but in this case we purchased directly for a customer, that being Eric Music. We've actually received this guitar now from the vendor, which is indicated here, our vendor being Epiphone. So we got an order from Eric Guitar. We went to Epiphone, our vendor, gave a purchase order, said we need this guitar. They shipped the guitar. We have now received it, indicated here. Now we can give it to the customer. At the point in time that we give it to the customer, that's when we need to record the sale and the inventory. That's when our job has been done. That's done with an invoice. That's what we're doing now. We're going to close this out. We're going to go back over here to the invoice and record this invoice. So we're going to click on the invoice. And then we have the customer field. We're just going to type in. We could see the drop down, but I'm going to type it in there. We're typing in ER, and then we see the customer we're looking for. We're going to select tab. Once we select tab, this screen should pop up. This screen says, the customer or job you've selected has outstanding billable time and or costs. Do you want to 1. Select the outstanding billable time and cost to add to the invoice, or 2. Exclude outstanding billable time and cost at this time. You may add this later by clicking the Add Time Cost button at the top of the invoice. So we're going to say, okay, we do want to select that we're going to select the outstanding billable time. When we say okay, this screen pops up and we may say, there's nothing there. What happened? Remember that there's tabs here, or note that there's tabs up top. So there's nothing in the time tab. That would be related to service items. Nothing in the expenses, mileage. There is something, however, in the items tab, the inventory items. Remember, items basically means, in this context, inventory items. And there's the inventory item we're looking for. It was created from that purchase order that we were looking at. It gives us the epiphone, the quantity, the amount, the rate. And we can go ahead and click that in terms of the check mark, and then OK, and it should populate our invoice for us. So if we tab through this, then we've got the date. We're going to keep that date. The invoice is the 3rd. The bill 2 has the name, not the address. We hadn't populated the address. The PO number, the terms. We're going to keep the terms here. Actually, we could put terms here. We're going to say net 30 on the terms, due in 30 days. And then we're going to say it's the ELP. This was generated from the purchase order that had then been received. The invoice now indicating that we're going to deliver the guitar. That's typically the point in time that we have the invoice when the work is done. We've got one of the epiphones and the rate is 500. Note that we also have the sales tax down here, 5%. That was drawn by us putting in the items for the specific state. It will change from state to state. Therefore, the amount due, $525. Remember what is not here. What is not here is the cost. But QuickBooks does know the cost and will record the cost. How does it know the cost? We have it in the lists. So in the lists and the item list, we're looking for an Epiphone Les Paul. So if we go to the Epiphone right there, and then I'm going to go ahead and edit that. Edit item. And we will then see that item. The cost is $400. The sales price is $500. So when we record this invoice, we're going to close this out. Going to close this out. We're back in the invoice. When we enter this invoice, we'll see the sales should go up by 500. The accounts receivable should go up by 525. We should have sales tax of the 25, and then we should have the cost of goods sold going up by 400, and we should have the inventory going down by 400. So we'll take a look at that. The key point, the difference here from this transaction than the last time we looked at the invoice, however, is this connection from the purchase order now populating at this point. We're going to say save and close, and I'm going to say you have marked this. Oh, we're not going to email it. I've got it marked for email. I'm going to unmark the email, and then save and close, and say okay. And then we're going to go to our reports and just check this out. So we've got the reports. We're going to go to company and financial. Look first at the balance sheets. So balance sheet items. I'm going to change the date to 12/31/21. We're working in 2021. I'm also going to change the date range by going up to customize report. And then changing this from 01/01/21 to 12/31/21. And then OK. Now when we drill down on anything, when we zoom on anything, we'll have a date range in our transaction report. Let's take a look at that. Within the receivable, we would expect the receivable to go up from this transaction. I'm going to double click on that. We see the receivable here has gone up by that 525, double clicking on it. We see the 500 for sales, but that 25 in the sales tax, meaning they owe us, the customer owes us, Eric Music owes us $525. Closing this back out, we saw that the other side of that, if we have the sales side of it, the other side of it is sales. If we have the receivable, the other side is sales. So if we go to reports, that sales being on the income statement or profit or loss, we're going to go to company and financial, and then take a look at the profit and loss standard. Change the dates 01/01/21 to 12/31/21. And then within the merchandise sales, we should see this sale. If we double click on it, we see there's our 500 sale that we made. The other side of it to accounts receivable, double clicking on it or zooming in it, we see the invoice that has been created. Note that the sales amount, however, is only for 500 and we had 525. The difference being the sales tax. Closing back out of here. There's the 500. Where's the 25? We will go back to the balance sheet. Look for that 25 in the liability. It should be in the sales tax payable. Sales tax payable. We're going to double click on sales tax payable. And there's the 25 right there. We owe it to the state. We need to write a check to the state. If we double click on that item, we get our same invoice. Also note that inventory should have gone down. So if we went to the asset of inventory, merchandise inventory, and take a look at the activity there, we should see it decreasing. So if I'm going to scroll back up, we have inventory asset. I'm going to double click on that item and see that we have the 400. Notice it went down by 400. We had not seen that on the sales on the invoice. However, this invoice is what created this 400 due to the items that we used in it. If we double click on it, there is the 500 sales price. We don't see the 400 at all. We had to go back to the list items, the inventory items, and look at the detail to see where that 400 was coming from. So just remember that this other piece of it will be recorded as we go through this. The other side to that, on the income statement, on the profit and loss, it's going to be under the cost of goods sold. Here's cost of goods sold. Double clicking on that, we see the other side of that 400 right there. Double clicking on that, we get back to the invoice. So note there's a lot going on within an invoice. When we record the invoice, there's a lot going on. If we're selling merchandise, we have to deal with the sales side, we've got to deal with the sales tax, and we have to deal with the inventory going down and the related cost of goods sold. We're going to do this one more time, so I'm going to close this out. And we've got another customer. We'll keep the profit and loss and balance sheet open. We're going to go back to the home tab. And we've got another customer. This is going to be a music stuff store, and we're going to invoice them for, again, a purchase order that was pre-ordered that we have now received. Now we're delivering the guitar to the client, and at that point, that's when we earn the revenue. That's when we record the invoice, which records the revenue earned. So I'm going to go back up here, purchase order, just to check out this purchase order that's going to help us create this. It is going to be here, music store stuff. We made this purchase order directly for this particular client, saying, hey, Gibson, this our vendor. We need this particular guitar. They're going to give us the guitar in our system. We're going to say this guitar is specifically for this specific customer. Thereby, when we get the guitar, we can create the invoice when we're ready to deliver the guitar. And we can put in the invoice this data that we're getting from the purchase order directly by linking them. Closing this back out, we'll then go to the invoice and do that process. Invoice, we're going to type in then the customer. We could select the drop down, but we're just going to type in the music stuff store and then select tab. And it's going to give us that same message. This customer or job you selected has outstanding billable time and or costs. Do you want to select the outstanding billable time and cost to add to this invoice? We're going to select yes, we would, and say okay. And then it's going to say these are the tabs we have. Now it defaults to time as if we're invoicing time. Nothing's there. Nothing's in the expenses, nothing's in the mileage. We're looking for the item. Remember, items in this context, in most contexts, is an inventory item. So we're going to check that inventory item. That's the one we want, the Gibson SG. We're going to say OK. And then it will populate. Let's tab through this and see if it does what we think it should do. So there's our date. We're going to keep that date. Invoice is going to be automatically generated. Should be correct. There is our billable too. We're not going to add the address. We got the terms. I'm actually going to add the terms here once again and put net 30, due in then 30 days. We've got the item, the GSB, which is, we want one of those. It's a Gibson SG, rate 777.4. Again, if we want to know what the cost was, we'd have to go to lists and we'd have to go to item list. We want the Gibson SG here, then items, then edit item, and that'll give us what the cost was, which is this $598. We will see that $598 in cost of goods sold in the reduction of inventory as we record the invoice. Closing this back out, closing this back out. We then see that item there. We see the total, and we see that it is taxed. Therefore, the tax at 5% of the 777.4 gives us $38.87. Total amount then $816.27. Once we record that, this is what's going to happen. We're going to this invoice shows that we basically are delivering the guitar at that point in time. And at that point in time, we have earned the revenue. Therefore, accounts receivable is going to go up. We haven't gotten cash yet. Receivable is going to go up. We're going to credit the sales or increase the sales, but only increasing the sales for 777.4 when the receivable goes up by 816.27. The difference being the 38.87 in sales tax. That's going to go into a payable that we owe the state. Then we've got the merchandise that's going to have to go down, not by any number we see here, but by the number we just saw when we looked at the list. And we're going to have the cost of goods sold, the expense related to this selling of this asset, this inventory asset, would be also affected, the cost of goods sold, bringing net income down. So let's do that. We're going to say save and close. And once again, I have the email marked, so I'm going to close this email and say save and close and yes, and see if it does what we believe it should. Go into the balance sheet. We believe that accounts receivable should be going up, so I'm going to double click on the receivable, and here's that item, Music Stuff Store. Double clicking on that. Here's our invoice. Went up by the 777 points, well, it went up by the 816.27. Closing this out. Closing this out. We think that revenue should go up. It's going to be on the profit or loss and the income statement, same statement. We have the merchandise inventory, double clicking on that. We see this item here, 777.4, double clicking on it, noting that it went up by the sales price, not the sales price plus the sales tax. Closing this back out. That means we need the difference somewhere. Going back to the balance sheet, looking through the liabilities, we will see a liability of sales tax payable. That should include the difference. Double clicking on the 123.37, we see that 38.87. Double clicking on that item, we see that that's the sales tax. That's the difference in our sales part of the journal entry. Closing these back out. Then we have the reduction in inventory. The reduction in inventory being an asset. Scrolling up to the asset section. Inventory asset here. Double clicking on that. We see that the Music Stuff Store asset going down. There it is there. We don't see the amount anywhere on the invoice, but QuickBooks knows what it is, how, through the list, through the item list when we created the inventory item. Closing this back out. The other side of this is on the income statement under cost of goods sold or the profit and loss in our open item window. Double clicking on the cost of goods sold expense. We see this last piece, the $598. Double clicking on that. Back to our invoice. Once again, we don't see the $598 on the invoice, but the invoice has generated it based on this item and us setting up that item as we've done in a prior presentation. Closing that back out. We see it there. We see the net effect then, an increase in the revenue, an increase in the cost of goods sold, the difference being the net effect on net income. Also note, of course, that the accounts receivable aging report will be affected. The accounts receivable by who owes us money will be affected from this, as well as the inventory being decreased when we look at inventory reports going down due to this transaction.